This was very interesting to watch how clean the auction market theory price action has been in this little range, okay? So we obviously had the low put in here, start of February. We've basically had this range, right? And guys were getting bullish at the highs and guys were getting extremely bearish at the lows, which, as you well know, is not how you should be trading ranges. We had this kind of nice, clean descending channel, which was giving us some nice reads for a while. I would say that we broke out of that back on the 4th of March. And you can even, there's one way of looking at it that says this move was just a retest of that channel high, and now we go higher. The analytical tool I want to cover over the next few minutes is volume profile, and why this can often give you quite nice reads when price is in range bound environment like this. So obviously a volume profile, it's just a visual of all of the volume that has been traded in, a range, in a specific amount of time, in a price leg perhaps. But this volume can give you some interesting levels. It gives you the value area, which is the first standard deviation of volume traded in that volume profile, right? Gonna end up being like the top 68 or 69%. And that gives us our VAH and VAL, value area high and value area low, which in theory should act as dynamic support and resistance levels. It gives us these range extremities, which are usually where the most high probability trades will be found. You always want to play from the extremities, right? Play from the extremities of value area high, value area low, and sit on your hands when price is in the middle. Don't diddle in the middle. And it also gives you this level, which is the POC, the point of control, which is the highest, the level of the pico highest amount of volume in that volume profile, right? So applying that to the range we've had over the last month/5 weeks. What can we say? Well, we can say that it's been relatively clean, right? A little bit of a deviation down here, but otherwise deviation up here, otherwise relatively clean. The price action that we saw at the start of March was a textbook failed auction. So auction market theory suggests or theorizes that all markets is an auction house, a virtual auction house, where buyers and sellers, in the same way that buyers and sellers would agree on fair value of livestock at one of those Texas auction houses where the guy in the cowboy hat is speaking at 1,000,000 miles an hour, I'm not going to do an impression, but you can look up the videos if you want to know what I mean. In the same way, this BTC chart is an auction house where buyers and sellers, in theory, are bidding on price in order to set a fair value for that price. They're setting bids and asks in order to establish what they believe to be consensus fair value for the asset. And what we mean by value is just a level or levels at which buyers and sellers have agreed that, yeah, this thing is roughly the correct price right now. And that is the value area. That's why we call it the value area. As a trader, you should know that you don't want price to be fairly valued, because when price is fairly valued, it means both buyers and sellers are willing to engage with it, which is bad for you because it means choppy price action, it means hard to read price action, it means balanced price action. You don't want balanced price action, you want imbalanced price action. You want inefficient price action. You want prices that are either too expensive or too cheap, right? Because those will give you the highest probability trades. And what do I mean by too cheap or too expensive? This is too cheap. You should be a buyer. And if you were a buyer, you would have caught a 10% move to the upside. This is too cheap. You should be a buyer. And if you were a buyer, you would have caught a 17% move to the upside. Now, obviously, this is all hindsight, but the fact remains, it gives you volume-based range-bound principles. And those principles suggest that you should be a buyer when the asset is undervalued, and you should be a seller when the asset is overvalued, right? And it's the exact same diagram that I drew last week, boys. When price is in a range, you should be looking for reasons to get bearish at the highs and looking for reasons to get bullish at the lows. It's the same diagram. I'm just approaching it from a volume-based analysis point of view, right? So when we say failed auction and success auction, right? Price is balanced, price is trading in a value area. Buyers and sellers have agreed that this is relatively fair value for the asset. When one side takes over from the other side, let's say buyers step in, begin to push price higher, right? It means that the market is coming to a consensus that this asset is undervalued. This value area is no longer fair value. Fair value is now higher, right? It's time to reprice this asset higher. So we had, a month of price action where the market said this this asset is fairly valued between, 70K and 65K, but now we're thinking that, it might be time to push it higher because we think fair value is higher. We think that it's undervalued in this value area, and it's time to push it higher in order to potentially seek new value, right? So we get this big move up on high volume above the value area. We take all these buy-side highs, and what happens? Does price continue to push? Does it establish new value higher? No. It distributes at the highs and rejects all the way back down to VAL. This is a textbook failed auction, right? We call it a failed auction because the market attempted to auction price higher. It attempted to auction price to a new value area that was going to be higher than the last value area, but it failed. Buyers failed to establish enough dominance to push price higher, and therefore price rejected above the value area high, taking these key highs, and went all the way back down to VAL, right? I will say that I was already leaning bearish up here, but the moment that you there should have been alarm bells ringing was when we accepted back inside the value area. This was a key support resistance level, as I mentioned before, this 70K pivot. You see already that we've rejected from it 3-4 times before in this range. When we bounced from it here, I was thinking, oh, okay, so this might be the retest, the bullish retest that we needed to go higher. But that only lasted a few hours because actually later that day we rejected. We went all the way back down to the POC. And the POC acted as support here, which was interesting, right? But as soon as we accept back inside, you should be thinking, okay, this is a failed auction. Bulls failed to auction price higher. Now the rotation is on. The rotation to value area low. At this point, you should have been thinking, where are my shorts at, right? Now, I wasn't at my desk, so I didn't catch anything, right? But that is potentially what you should have been doing. Now, I'm not a breakout trader, which is effectively what this trade would have been like, or rather a breakdown trader. But if you could have caught something here with your invalidation up here, you would have caught potentially a very nice short, something like this. That's a 2.9 3-hour trade right there. The rotation we got went from VAH all the way to VAL, and that is exactly where we're bouncing from now. Notice that VAL has provided support in the past, and this time is no different. Bouncing 5% over the last 13-14 hours. VAL is the level we bounced from. And now where are we coming to? We're all the way back at VAH. The rotation has happened. The rotations that we have gotten so much of in this value area, in this volume profile, in this range, we're seeing another one. Look at these rotations. Not really rotation here, POC. And we're going to see another one. I think we're going to see another one. I would be surprised if this goes up here, to be honest. And if it does, then probably means that the volume profile is over and that we're going to seek new value higher. But that is auction market theory. And I have some annotations here. Let me quickly run through those. Distributive PA at range high after taking key buy side highs. But that should have been your first indicator that this is potentially a VAH deviation, range high deviation. Failed auction is looking extremely likely. Your failed auction confirmation is once we accept back inside the value area. We lost that key support resistance level. The VAH retest failed, and that's the important part. I mentioned that on the 6th of March, we actually had this little retest here and price bounced about 1.5%. I was thinking, yeah, if this continues, bulls might be in with a chance here. You know, we bounce here and we just continue higher. That's the retest. But we rolled over and we went back inside the value area. At that point, you know that the auction has failed. It is a confirmed failed auction, and you look for rotations lower. I then mentioned that we found a little bit of support at the POC. And again, POC, highest volume. Therefore, a level at which you would expect both buyers and sellers to engage with. So it acts as support when price comes down to that level, just as it acts as resistance when price comes up to that level, because buyers and sellers are both engaging. But also quite a lot of chop, which you saw here. I mentioned that the longer price builds value inside the value area, the more likely it is to fully rotate to VAL, right? And that is one of the principles of auction market theory. When price spends time at a value area extreme, or when price rejects at a value area extreme and goes back inside the value area, the longer it spends in that value area, the more likely a full rotation becomes, right? If it is really a successful auction, you'll usually see a quick move back outside the value area. The longer price spends inside that value area, the more likely a full rotation becomes. I just mentioned here, rotation from VAH to VAL complete, textbook failed auction. Now, I was leaning a little bit bearish, I won't lie. I said that in theory this level should act as support. However, with an uncertain macro and lots of downside momentum, these lows are also a target. Now, in the end, we didn't go for them. We have bounced here. But I do think that long term, these are going to be the lows that get targeted. I've already mentioned, I do not think the downtrend is over. I still think that this is going to end up being just a complex pullback like what we got between mid-November and the start of January. And I do think that the next leg down, when it comes, the next high time frame trending move will be to the downside and a continuation of this structural downtrend that we've been in since October. Clip that shit, boys.